I would like to welcome everyone back for the conference. We'll get started with our second session now. The title of this session is Tariffs, Opening Up for Competitiveness. This session will be responding to the following questions. How can we use the tariff policy to enhance our trade competitiveness without compromising the revenue collection? Can trade liberalization be integrated with domestic tax reforms? Are our average tariff lines conducive for domestic and foreign competition? How efficient is our track and trace system? Why do we need SROs in the presence of a policy, and who benefits from the SROs? What is the loss from SROs? How can these be eliminated permanently? What is the impact of our protection policy over the medium term? Can we open out our economy as experience shows an open economy is best for growth? Among the panelists, we have Dr. Manzoor Ahmed, who will also chair this session. He is a senior fellow and advisor at PIDE. He is also the chairman of the Board of Trustees of Prime Institute and the chief executive of World Trade Advisors. He was also Pakistan's ambassador to WTO at Geneva from 2002 to 2008. He has also held various senior positions in FAO, WTO, FBR, and World Customs Organization. He's also a regular columnist on trade issues. On the panel, we also have Ms. Teresa Deban-Sanchez. She's the resident representative of IMF in Pakistan since March 2018. She has worked at the fund as senior desk in several emerging market economies in Latin America and Asia. Her distinguished career as an advisor in the Spanish Ministry of Finance spanned over a period of 8 years. We also have Dr. Jawad Uwais Agha as a panelist. He has served for 36 years in Pakistan Customs Service against various positions. Dr. Agha has spearheaded all major reforms and automation activities in Pakistan Customs. He has also prepared Pakistan Customs' comprehensive 5-year strategic plan in collaboration with the World Bank Group and Customs Service from 2018 to 19. Mr. Jamil Nasir is also part of the panel. He is the additional collector of customs at the FBR. He has the experience of working at policy level to closely examine the tariff setting process in Pakistan. He has done Masters in Public Administration with Economic Policy Management from the University of Columbia. He has also contributed a number of research articles in various journals and newspapers on economic development. I would like to request Ms. Dr. Manzoor to please take over the session.
Thank you very much and welcome back. As you see, I'm panelist as well as the chair, so I would not use double the time, but maybe a few minutes as introductory for as the chair of the session. First, I'd like to thank you, Dr. Nadeem Haque, for organizing this. This is the second conference he's already organizing on tariff policy, and in my 40 years, I've not had 2 sessions ever on tariff. So this is really grateful, and I hope this debate goes on further.
Don't think you'll get a third.
Okay, maybe, unless they fire him or something. Okay. You see, another thing he said in his earlier comment that for 40 years we're stuck with this tax policy, and I said the same thing for 40 years about this tariff policy. 40 years ago, Pakistan used to be, relatively forward-looking country compared to other countries. We were, if you just look at maybe a few hundred millions of exports of Pakistan, but if you look at any of the ASEAN countries, maybe a combined ASEAN country, you look at Thailand and Indonesia and all these countries and their combined total of exports, and we were more, we were higher. And now if you look at any of those countries and us, we are not even a fraction of any of those countries. What went wrong? Many things, but one of the, they say only tool you have is a hammer, everything you see is a nail. And I look at everything through tariff. I think other than education, tariff was the most important thing which has kept us back. And earlier a country realized that that they need to get rid of it and integrate their economy with the rest of the world, the quicker they made progress. And I'll give you 2 or 3 examples. I think in the 70s, Chile was like Pakistan, very protected, all that. And then Pinochet came and he said, too many tariff slabs and this and that. I don't want all this. And everyone ran into me for protection and higher. So he said, and you're the dictator. So he said, all finished, everything 10%. They said, you know, this guy is going to destroy our industry, he's going to do this, that. He said, and after a few years they said, oh, even that is too much. Everything 6%. And now you realize, where was Chile then? And now it is the most, what should I, developed country in Latin America. It's a member of OECD now. They're having some problems recently, but they are what is it? Then, well, I mean, another country like us, Turkey was like us till the 80s. In 1980, they had the same exports, textile, clothing, like Pakistan is doing now, and Pakistan was doing then. And they had exports of something like 3 billion, Pakistan was 3 billion. And then they got a very forward-looking guy, Kardar. He was from the World Bank, became their first minister and then the prime minister. And he said, okay, we have to look forward to joining EU one day. And we have to reform our tariff policies and bring them at par with EU. And again, there was big fuss in the country, especially the auto industry. They said, look, we are, you know, these Europeans have been producing cars for 100 years and we're just starting it and we'll be ruined and all that. And stood firm, got them to get rid of their protection and infant industry argument, all those arguments that our industry gets. And he said, get rid of it. And now their auto industry they produce more cars than Italy. Italy is, you know, one of the, and now producing more cars. And from 3 billion, well, they started reducing their tariffs, and by 1995, they were in a comfortable position to join customs union with EU. Same external rate for all industrial goods other than agriculture. And now they're 170 billion. And if you look at their exports list, it's mostly machinery, autos. These are value-added goods. Pakistan, from 80, now, again, textile, clothing, yarn, and same thing, because it kept some of those industries protected. And maybe one more recent example, that of Vietnam. Vietnam started opening up in 1986 with their Uy, whatever they call it, the reform. And by 1995, at the time, if you look at 1996, we were 1.5 billion, they were $500 billion exports. And by 1995, and they started getting rid of this tariffs and also the state-operated enterprise. Only if they were competitive, they stay, otherwise they close them down. By 1995, they reached us 5 billion, Vietnam, 5 billion us. And now, 2020, they are about 300 billion, and Pakistan has got to just 20 billion. We still, even now with that, we are considering mobile phone, we are still thinking deletion program and things which were gone out of fashion for 30 years, and now we are still thinking that. So unless we realize this, I think we'll stay stuck. We are completely isolated in terms of, if you look at our trade to GDP ratio, our export to GDP ratio, our international integration, we are completely off track. And now I go to my second part where I'm a panelist. And I try to answer these questions. First is, how can we use the tariff policy to enhance our trade competitiveness without compromising the revenue collection? Let me see the, oh sorry, it's here. Like this. Okay. You know, this, I'll go straight here. You look at, we say that without compromising the revenue collection. Nobody uses their tariff policy as for revenue collection. That's used for, you know, it's Pakistan's, because of this, it's become the main trade policy instrument of Pakistan, this customs tariff. And I don't know, now they're changing, but this system, collection of and setting of tariff, is given to FBR. I'm also from FBR, previously I was member customs. But we have a conflict of interest, because whoever is the member customs, he says, oh, if I reduce the duty, if I'm asked to reduce the duty from 30, 20, and they calculate, okay, 10% less, that means our revenues go 10%. If we raise the duty, so that means, so they're conflict of interest, and they don't really believe it, even if it comes from the top. Look at Pakistan is the highest. I mean, South Asian average is high because of Pakistan's high tariffs. But in compared to any country, we are 3 or 4 times, and this weighted average, you know, if you look at regulatory duties and other duties, then it becomes far more. And not only our customs tariff, but we end up almost collecting 50% or 48% of our taxes from import, and some of them get adjusted, and it's all the distortions caused by collecting this. No other country, I think, would have you know, maximum import taxes maybe 12-15% from imports, and Pakistan is almost 50%, and so is our duties. If you look at, for example, Pakistan, now it's 18% duties. Last year, I think they collected. And look at Turkey, 1.5% through customs duty, because they let goods come in, process them, and then collect taxes. And we don't let anything come in, so it creates this problem. And one other thing we do is that, I think Dr. Athar Maqsood was saying this, that we started, like many other countries, we also started that reform process from 80s and continued through 90s, although it was stop and go. Every second year we put some regulatory duties or something, but eventually still made it to a certain point, to the, what would they call it, tilting point, or that. So we reached a certain point by 2002, but that's it, we stopped there. And you look at from 2002, when we, because those final 2 or 3 years of, first 2 or 3 years of Janam Sharaf, and the final year of tariff reform, which started from 2002, and look at after 2002, our industrial growth was at least 14-15%. Our exports are growing at 40%. In the next 5-6 years, our exports doubled everything. Then comes 2008, and we got an excuse because of international financial crisis, etc. It came all over the world. It came to India, but we just took it an excuse, and we said luxury goods stop. And luxury goods, how do we define? You don't know. So we asked FPR. We give them some example. Okay, dog food or cat food, but then FPR, and for FPR, anything that you can look at is luxury. This is big luxury. Paper is a big luxury, 52%. Anything around you see in table, and they have a long list about anything that there is trade is a luxury good. So they put regulatory duty and additional duty and all that. So that's where we end up. You see, what I mean, besides other things, when you have these, I looked at 2 or 3 top items that go to Afghanistan through, Afghan transit. It's fabrics, and it's tires, and I don't know, I can't see the third one. Sorry? Electronics. And you see the import taxes. In all these cases, you know, at one time in FPR we used to have an exercise, and we realized that if something has tax of more than 20%, it goes into the smuggling prone. And we used to have a list, smuggling prone items, bring them down. And in fact, when we, when reform process finished in 2002, we checked with the World Bank and said, you know, has it made any difference? And they said, we have not done a study, but some survey, etc. In 96, etc., it was 2 billion through Afghan transit, and now it's come down to 500 million. And many of these big smugglers, people who used to trade through Afghanistan, they decided that now that the reform is so deep, that our benefit or our jo munafa hum kamate hain is so less, that we'd rather set up industry there. You know, this hire industry in Lahore, this guy used to book all production from Malaysia, Afghanistan, and here. And then he said, he came to us and said, you know, hardly now any, because I pay customs, I pay these agencies, everything, and the extra cost, so I'd rather put up these, and you see all this. But unfortunately, from 2007, we finished that process, reversed the process, and now this gray economy which had come down is just shot up again. So I could just quickly go to 2 or 3 industries and tell you that. For example, we were last year, we had this tariff reform committee, and I was asked to chair that, and we talked to these engineering industries guys and said, you know, why is Pakistan only 0.15% of its exports are engineering goods? In other countries, look at India, it's 25%, and global average is 50% because everyone is in the engineering industry. And they said, look, here are these 2 villa factories. And the duty could be anything from 52 to 92% on raw material, like steel, like these things. 50. And they said, if we pay that much, there's no way we can move forward. Auto industry. I show you the next one here. Now, in 2001, the rules came in WTO in 1995, but they gave 5 years to developing countries. In 2000, all countries were asked to remove their import substitution deletion policies. Pakistan obviously was very reluctant, and India also reluctant, but India, because we're a big market, so EU and US took them to WTO dispute settlement. They had to get rid of those deletion clauses, and Indian auto industry was, you know, compared to Pakistani cars, in 2000 there's that ambassador car, and Pakistani cars used to be far more. Now, 20 years later, you go and you see a Pakistani car, and you look at Indian cars, it's huge. There are 2 or 3 countries who tried to, for example, Malaysia was very keen on their proton core and wanted to, but they had to open up because of ASEAN. But they stayed there, wherever South Africa, Pakistan dodged, you know, through some system or another. They never adopted that, and there we are, still the same deletion policies, and other countries which adopted, where have they gone? Okay, maybe this, the final industry, this information technology products. In, you know, if you look at Pakistan compared to, let's say, Philippines or India, they have this big export of, you know, I think Pakistan is about 1 billion, Philippines is 20 or 30 billion now, India is more than 100 billion. And because we make, one of the reasons, I mean there are many other reasons, I'm just because concerned about tariffs. There's a WTO agreement, because at the time not every country could agree. This is information technology. They said you should not have duties on these computers and you know, such IT products. Pakistan has been thinking from 1998, and we just had another meeting last week. And again, one of the, maybe my friend from FBI here, they said, well, but we lose so many billions, and you know, we can't accede to it. And instead of, maybe, you know, they think if computer or laptop is cheaper, it's a loss for the economy. It's not a loss for the economy. When you buy a computer for your children, it's not a loss. You know, you use it. But they are still today. Last time what happened, Prime Minister set up a committee, and FBR's committee was headed by, am I running late? Okay, 5 minutes. And the committee consisting of commerce, industries, IT, and FBR. Everybody said it's in our interest. Everybody was joined. There was many studies that they've done very well, and so should Pakistan. And FBR said no, but we lose money. So it goes to Prime Minister. Okay, again another look, again the same. And next time Prime Minister overrules FBR that in the bigger interest of thing, if you're losing 2-3 billion rupees, and if you're making, you know, 50, 100 billion in dollar terms, you know, it's 2 and 3, we should accede to it. Then it comes to cabinet, and FBR to its minister says, well, why don't we conduct another study? So it's after 20 years, another study, and it's the same. And now more recently, again it started, and they said, okay, we should conduct another study. But there are 10 different studies. Okay, we'll pay something, and now IT ministry is conducting another study whether to do it or not. Okay, so I've discussed all this, but you know, if Pakistan was to open up and for completion, that was the heading of this session. I mean, in the last 15, 20 years, since it started in 80s, instead of many countries realize that they cannot be producing everything themselves, so they want to become a part of global value chains. Okay, we can't produce a car because 20,000 parts, all of it ourselves. Let's try to get components here and there. And so the whole trading patterns changed. Pakistan didn't adjust. Pakistan is still today, because they have their clearance system is very inefficient. We are one of the worst in terms of trading across the borders and all that. So we are completely out. Say if Malaysia or Vietnam, anything they export would contain 40% imported things. They come and they add value, they send them back. Pakistan doesn't believe in that. Pakistan's imported component is just 5% of the exports. So we are, because not opening up, so we are not getting globally integrated, and we still are very keen. You see every, other day something in the paper that we should promote import substitution, and we should, things like that, which have completely gone out for the last 20, 30 years, but in this country, nobody is convinced of these things, and they still want to go on with the same policies. Okay, so I think I'll stop here, and maybe I have another opportunity when the question and answer session comes. But yeah, just to say one thing, that fortunately we have a very, very good panel. So we have internationals here. Teresa, she has experience in Latin America, here and there. Pakistan, so she is an economist, and we have two FBR. FBR normally shuns such dialogues because they just say we are too busy. But now we have here, and we have ex-FBR also. my teacher in Boston, Martin, is there. So we will start with Teresa. You, okay? Please go ahead.
Thank you very much. I think that I have a presentation. Yeah, we'll use it. Yeah. Also, maybe how much time do we have? I think 20 minutes is okay, especially because I feel like here like I'm an outlier, but I'm not an expert on tariff. But I think I know a little bit about competitiveness. So, and well, to introduce myself to everybody, I'm Teresa Sanchez, the President Representative of the IMF. Our office is next door in the Q block. So you are welcome to come to visit. And we deal with taxation, among other things. So I'm going to do a presentation, 20 minutes. I'm going to change a little bit the focus, you will see, but I think also to an interesting area. But I want to say a few things before. Yeah. Okay, 15 minutes. I can go fast, no worries. Yeah, I can go fast. Yeah, because the question is going to be very interesting. I only want to say a few things before starting. That is that I believe that there is more need for research on tax issues in Pakistan in general. But me as a newcomer, when I arrived, what I found is like there's so much diagnostic on taxes in Pakistan. There is so much to read. FBR is every day in the newspaper. Everybody's talking about taxes. So I got the other impression that this a lot. Maybe what is not happening is that this law is not bringing the decision making in the direction that we would like to see, or in the past it didn't happen. This is a different matter. But the topic is really very relevant. It's every day in the newspaper. I can see that. No, more research, more analysis. Yes. I encourage everybody to read the Memorandum of Economic and Financial Policy of the program of the government of Pakistan that we are supporting. There you can see that there is ideas, intention, actually on putting together a tax policy unit in the Ministry of Finance, because we believe that the separation of administration and policy is important. Has been done as regards the tariff. That was a huge battle that was done. Now tariff is determined by the National Tariff Board, and I think this is a very good thing. It has been done for tariff, it could be done for the other elements, and we are working on that. We are going to engage on a lot of technical assistance with the government of Pakistan right now, so we will see progress on that area. The other thing that I would like to do in brackets is that we are talking about taxation, tariff, etc., and the provinces should have been maybe invited. I don't know if you invited them, I didn't come, but
I would like to, to have this type of invitation that representatives of provinces need to be in this type of debate because they control a lot of part of the revenues collected in this country and they are responsible for a lot of expenditure. Okay, let's go. So how we go? This way? Yeah. So this is a kind of overview because I'm going to bring the discussion to another area that is close to my heart right now. First of all, a little bit overview of Pakistan's system. I'm going to repeat things that have been done, but with a focus on competitiveness. Because the issue of competitiveness in Pakistan is not only about tariff. It's about that other areas in the economy and taxation in particular is, I'm making Pakistan not competitive. So tax reform is not only about collective revenue. Tax reform is not only about making people's lives more easier and reducing the cost of doing business. It's making this country more competitive and more open for business and for investors and to flourish in the international market. That's why I'm going to talk about the GST harmonization. As we mentioned before, I'm going to make a very important point there because one of the things that we believe is that because the fragmentation of the GST, export of Pakistan are very difficult to get out of Pakistan fully free of taxes because it's very difficult to clean up the final price of export of GST because it's fragmented, and we are working on that direction. I think it's important. I think I can do some conclusion. Okay. First of all, a few overview. I'm going to bring data because so far everything I'll be a little bit more narrative. I'm going to bring data to the discussion. I mean, unfortunately, the numbers are very tiny, but this is an overview of Pakistan's tax system in general that I think is important to have in mind before we decide anything about any tariff, any import or anything. And the main conclusion is that the tax effort is low. I mean, we know that. And then you have comparative data that make comparison with other emerging markets, with OECD countries, with peers. So the problem is not the rates. The rates are quite high. Actually, in Pakistan, you look at that. You have here the rates of different taxes. And the problem is more coming from the base. The base are narrow. That administration, of course, we have talked a lot about that. And then taking all of these elements into account, there have been some research done at the fund for each country in the world. Actually, there is a working paper, I can share that with you, in which you can compute what is the tax effort of the country, meaning given your peers, how much you should be collecting given your GDP, given your quality of legislation. There are many indicators. I mean, of course, it's not a perfect exercise, it's only an econometric exercise, but I think it's very interesting. This tax effort is something that we look at a lot at the fund. So you can see, for instance, the tax effort in advanced countries, it's in yellow, is above the yellow, is about 80%. In average, it's an average. In emerging markets, it's about 70%. In Pakistan, it's 60%. That means that Pakistan has still a long way to go to improve the tax effort, meaning that the tax ratio in Pakistan could be much higher given the characteristic of the country. Unfortunately, other countries in the region, the peers, also have a relatively low tax effort, so there are common problems in the region, but it means that we have a lot of work to do. So, the overview, I'm going to go very fast, I don't want to go no repetition, but the connection with competitiveness. The tax system right now is very complex. Because it's very complex, then it's very complicated to be competitive, actually. That's why it's important to reduce this complexity. That's coming from, we know that, different rates, different exemptions, withholdings, all of this has been mentioned. But the most important one of the most important part is the fragmentation of the GST. Why? Because the GST, or the value-added tax, as it's called in other countries, is a tax that precisely was defined to make export competitive, to make sure that in each stage of the productions, the taxes are not translated into the next stage. There is no cascade effect, as we will see later, and exports are very competitive. In Pakistan, this is not possible right now because of the fragmentation of the GST. That's why I'm going to make the point later. The tax system also, and that has been mentioned, is complicated and also is difficult to change because, and this is now a policy-making component, is used for very many objectives, and this is a huge problem. Because if you want to, the tax system is done to collect revenues, to provide services for the citizens. This is the main objective, no? But then Pakistan happening in other countries, but here in Pakistan is very acute. This issue is used to provide an incentive to give a benefit to a certain sector, to reduce control prices, to when I have a problem with administration or compliance or documentation, I change the tax system to make sure that I can continue functioning. This is a complication, reducing competitiveness, not to connect to the issue that is occupying us today now. So this is a problem, has to be resolved. Tax system has to be to collect revenues exclusively. Because this system is complex, then there is a lot of widespread economic distortion. We have, most of them have been mentioned today, and one of them, for instance, is the minimum income tax for the corporate income tax. That, I mean, if you have to pay a minimum income tax, with business people, what they do is that they minimize whatever they have to pay. So how can you make decisions that are really productive, competitive, that are the one that the global market is asking? What you are doing is you are minimizing your minimum income tax. So this is an example of how the taxation is not only making life difficult for business people, but also making them very complicated to compete internationally. That's why, was mentioned by Dr. Hamid, one of the reforms in the agenda is to eliminate this minimum income tax. Corporate income tax should be defined as in other countries, and then with different type of elements to be collected according to the balance sheet of the company. This is a complication for competitiveness. Lack of progressivity is another area, was mentioned before. And then you will say, what that means, lack of progressivity, competitiveness, is very important because the system is unfair, is perceived as unfair, is unjust, it's not used to correct distribution of income. So that means that more people are accumulating wealth, are accumulating income, so resistance to reform is there because inequality is not corrected. So there is, everything is connected at some point. That's why you see a lot of sectors are asking for more protections because they're feeling that they are not treating properly, in other tax systems. So progressivity needs to be also to be tackled to improve competitiveness, to make Pakistan more efficient in the international market. And then finally, another element of the tax system in Pakistan is the underutilization of certain taxes. There are taxes that are highly utilized because they are easy to collect when activity is very visible, imports, and you will see that at the end of the factory, when the product is exiting the factory. But there are many others that are really very low compared to other countries. For instance, petroleum products, for instance, tobacco excise is a way to go there compared to peers. And agriculture, as mentioned before, because agriculture is not as part of the corporate income tax, so the capacity of mischaracterizing activity as agriculture and not paying the right share is very important. So this separation is critical to remove at some point too. So at the end of the day, the conclusion, and then I'm coming to the final part of my presentation, what is happening is that Pakistan's tax system will rely a lot on imports, because precisely because they're very visible, they're easy to capture, then the taxation is happening there. And it's happening not only because of duties, it's happening not only because of tariffs, it's happening also because of this withholding that are charged to importers, even before they can be any value added, because it's really, something uncompetitive, so it has to be also removed to make the country more competitive. This is a chart similar to the one presented by Masood, in what you can see Pakistan also, the average tariff is very high compared to other countries, on the top of that. And the tariff, precisely in the past, has been used to collect more revenues, something that should not be done now is with the new National Tariff Board. Tariffs should be only intended to use for international trade consideration. So, because of that, and I try to spend time in this presentation, is to bring you to the idea that tax reform is not only about collecting more, it's not only about making life easier, it's also about making the country more competitive. And the GST is critical. There are many others, of course, reforms that are important. But the GST is important because it was defined precisely to make export free of any charge, free of any tax when they exit the country. And in the case of Pakistan, we have several problems, but two-dimensional problems. First of all, the base is fragmented. We know that with the provinces, and also there is a lot of dispute in the definition. What is the good? What is the services? What is making life complicated? There are a lot of rates. I listed all of them there. I think I didn't forget any of them. That makes the whole GST extremely complicated to administrate or to navigate as a taxpayer. So as a result, what happens is that because the tax is not unified and there are so many rates, the creditability is not happening. And what is the creditability? The creditability is that when a business person is going to calculate the taxes that they have to deposit with the NBR, they cannot net out of the taxes that they have already paid to provinces. They have to pay to provinces GST on services. So this system is extremely complicated. It's not happening, and this is what is called the cascade effect. So that means that right now exports, Pakistani exports are exiting Pakistan with a lot of taxes that they would be very easy to clean up if the GST is integrated. And this is not good for competitiveness. And this is not good either for encouraging more sophistication in the production sector, because the more stages a business person incur at the time of producing whatever, more taxes have to be paid, more taxes have to be credited. So there is no an incentive to make export very sophisticated. You can see that in the export of Pakistan. On the top of that, there are problems with the administration, because a company that is operating in the whole country has to deal with 5 administration. We know that this is the complication. So at the end of the day, this is a very strong case for the GST harmonization, and then should be related also to the discussion about competitiveness. Because right now, as I explained, Pakistan is exporting taxes. That's what we call it. Pakistan is exporting taxes. So the export are not clean up, unfortunately. So that makes that export prices are uncompetitive, and this is also encouraging the inefficiency production of the choices of the business people, unsophisticated with very low value added, and this is a problem. It's a complication to go to a higher level of value added. And also because of all of this fragmentation, the GST is very difficult to use this as a tool to fight tax evasion or fraud or anything. So, to finish, so GST harmonization is a priority. As you can see, you are familiar with the Memorandum of Economic and Financial Policy of the program of the government of Pakistan. Is there an intention to be conducted this year? Dr. Hamid mentioned that provinces and the federation are already in discussion. There are working groups working on this area, because everybody has realized this is a priority for the country. There are many options, of course, to do that. Changing the constitution, this is complicated politically and takes too much time. A lot of things can be done even without changing the constitution. Basically, making sure that the base are homogeneous as possible within provinces, rates are similar about in between provinces, that the tax return has to be filled out as similar as possible, that there is an exchange of information between the 5 administrations, and then can be the credit can be done quickly between the tax, the GST on services and the GST on goods and services. So it's complex, but can be done, should be done. We are working on that, and I think that once it is done, I think it's going to be a very good news for improving competitiveness in Pakistan. Okay, so I think I finished with that, and then we can go to discussion on the area. Thank you very much.
Thank you. Our next speaker is Jawad Agha. He retired last month, but we worked together in FBR and in I think 2001 to I gave him an assignment. I said, can you, Jawad, can you go around the country, look at whatever rules and regulations we had from 1947, and see what is relevant, what is not, because our staff puts sometimes one rule, and for two months or something, it didn't bother me, and after 2 months he came back and he gave me a small little, he said, sir, all these rules of FBR are now in this one, this thing, and it was very, and since then I think they didn't, till today it's the same rules, so they didn't keep up. I mean they should have reformed them further. Okay, Jawad, please go ahead.
Thank you very much, Dr. Manzoor. Before I start, at the cost of not repeating, I'll try to move faster through my presentation on the portions that are already deliberated since this morning, and just to touch upon one or two issues. Each country has a unique requirement due to its domestic milieu or environment, be it cultural, social, religious, or other. And therefore the traditions and practices require a certain fine-tuning, albeit that definitely should be in line and in sync with the best international practices, which over the years has been attempted, albeit not at the rates that we would have desired. So, moving on, tariffs themselves cannot be seen in isolation. A lot has to do with the sectoral reform, a lot has to do with the whole of government approach, with the stakeholders, and possibly what we would need at the end of the day, as Dr. Nadeem was speaking this morning as well, would be to put more of systems in place so that there's less of interaction and less of discussions at the individual level, as Dr. Ikram also was referring to this morning. And thenceforth we could have a feedback-based sustainable system. Speaking of tariff policy, the revenue division primarily, which was established several years ago, more than around a decade ago, and then put in place through the FBR Act of 2007, was primarily to be the lead for tariff policy. And the revenue division was to be the policy body regulator like the ministries are. And the FBR was thence to be the implementing body and the basic field formations or tax collection or operations or whatever we'd like to say. And Dr. Ikram was elaborating this morning and deliberating on it that the policy body for the taxation would have been the revenue division, but somehow or the other, over the years, the revenue division did not grow, was not allowed to grow, did not have the capacities, was not permitted the capacities, was not ever taken seriously to be allowed to grow into a tax policy body which could handle the policies at the federal level or the provincial levels coordinating to move on. Then Dr. Hafiz spoke about the ownership aspect. So how much of the whole of the government approach or the sectoral or the public sector or the private sector was really interested in ownership, or were we all just interested in our particular sector or our particular restricted domains? Were we all within our shells trying to gain more space or more turf? I believe that we require multiple sessions to discuss that. So Dr. Manzoor, the lead, said that we have around 10 minutes, so let's move on. I'll try to jump the slides where we're running into repetition. So just an overview, a simple touch on that we run the tariff, we'll focus more on the international taxes rather than the domestic ones because a lot has been said on that. However, probably in the next session we'll be able to talk about bridging those taxes and bridging the gaps and having forward and backward linkages in them so that we have a total picture where we talk about data mining or warehousing. We'll do that in the next session. So there are specific rates, there are exemption rates, there are existing slabs, the cascading principle, whatever. Here, this is rather requiring a few seconds of your attention, that our effective rates on imports are much higher than anyone else in the region. That is due to heavy reliance on the international taxes at import stage, which as Dr. Manzoor referred to in the 2000s when we did this exercise, and I was working with him at that time at the FBR, was to undo this and to have an import stage effective rate, or the rates of collection totally on import stage would be much lower and in sync with the international milieu. However, we thenceforth, as 2007-8 has been referred to multiple times, reverted to this position. Now again, our regional import duties picture coming up. How much is it that we are collecting vis-a-vis others? Share of customs duties, ACDs, RDs, we'll come to that in a while, the regressive regulatory duties and ACDs coming in. And this is our position of Pakistan, which is again much towards the higher side and the highest in the region on shares of revenues collected at the import stage. Again, clearly we collect roughly 46% plus, and that's the 2018-19 statistic of how we have over the years increased reliance on and based it upon tariffs rather than basing it upon value addition and domestic growth and exports. We play the numbers game, so in playing the numbers game, we blame the FBR. I'm no more part of the FBR, having retired happily. But the point is that when we play the numbers game, we run amok. And that's where value addition, domestic industry actually is stifled. Major initiatives in tax reform over the years, the IMF program of 2012-13, prior to that, I've just taken it back 20 years, so 2001, 2002, which Dr. Manzoor referred to and spoke about, decreasing the slabs, decreasing protection, and having a fair, transparent system. However, when we moved the SRO regimes, now one little issue that did occur was that the SRO regimes moved from there into the 5th schedule. So we sort of tariffized them, or we moved for tarification in some ways. And again, this protection, how much of value addition did we achieve after protecting all this, or how much of value addition did we want to achieve when we deleted our SROs, but we tarified them and or moved them into the tariffs. Year by year, number of slabs did decrease. Last year there was a serious attempt. We moved 1640 tariff lines into the zero rating, which were mostly the raw materials, which we keep talking about, and the machinery and the capital goods. But as a result of that, again, the regulatory duties were given a fairer share or a larger share, which then resulted in decrease in imports and the import compression and the balancing that we were trying to achieve at the national level. How much of it we achieved will be a debate ongoing. Now, issues. Now, since we want to look at the challenges and how to move about with them, the cascading principle, of course, over there, but what goes wrong? Why do we bypass it? We start bypassing it. Internationally, tariffs have this cascading principle. The best international practice is the same. The WCO and WTO regime, which we are members of, does follow the same, that higher rates are applied to luxury items. Of course, the definition could be debated as how much of it is there, but we do not fix the standards, and then the moment we tend to bypass the principles of best international practice, that is probably when we run into disparities and utilize a certain national level discretion, which leads to more problems. What complexities do we face? In fact, what happens is that the local manufacturers want their share of their pound of flesh, and at the same time the traders want their pound of flesh. Balancing the trading environment vis-a-vis the manufacturing and value addition environment, or playing a balance between both, is a tricky ride, because it's a tightrope walking at that. If you move out to give a happy face to the manufacturers or the value addition industry domestically, then your trading industry or your traders or trading environment has its own issues and competitiveness, where they come up with that the local supply does not really cater to the requirement. There are quality issues on the local supply, and that was referred to earlier by Dr. Manzoor when he spoke about the auto industry. And then verification, variant specifications, etc. So balancing between that has been another challenge other than the numbers game. The national tariff policy was led by the Commerce Ministry. The argument was again that lower tariffs will lead to higher exports, and of course quantification needs to be worked upon through a domestic study or a study be conducted on that, so that we can have a more holistic approach in having tangible numbers whereby we would know exactly the roadmap we are adopting, and the deliverables which would be there need to be clearly spelled out at the end of whether it's year 1, year 2 or year 3. Now coming down, this is the bill of revenues that we will be looking to per annum. A major decision again when we talk of tariffs, that we need to segregate the tariffs issue from the numbers, from the revenue perspective. Otherwise we would again keep on playing into the revenue numbers that we need to collect, that we have commitments with internationally or with the donors or with whatever understanding we have on that, how to bridge that, how soon would we be able to gear up our inland revenue, domestic taxes to be at par in that manner. So one of the issues that came up as the challenges to the tariff policy that we've come about with was that the Pakistan Business Council study mentioned, the FTAs as being one of the issues which were a challenge. And then later on there are other capacity issues, there's a revenue trade-off, and there's lower tariffs which we need to work upon. A quick SWOT analysis, this has been spoken about much. So what solutions would we possibly be having? We possibly could go, we have solutions in mind, and broadly this forum and this debate is moving towards them fast, but it would be better if we move towards that in a phased manner rather than an overnight quick fix. So what all could we do? We definitely need to keep in mind incentives to our local industry and adjusting their inputs. We need to revise our duty tariffs, especially for the customs, and possibly do away with the regressive ACD and regulatory duty phenomena, which we are using purely for revenue purposes. Honestly speaking, this has never been a developmental or a growth target on that. Reliance shifting to domestic taxes and not having revenue as a ploy to our initiatives. In the second phase, what do we do? Let's move towards more of sectoral policies which need to be clearly spelled out. The industrial policy, the agricultural policy, the health policy, and all of those, so that they could be brought in tandem with the tariff policy then, and a clearly demarcated way to go in our value addition as well as exports. Then what do? We need to have a clear message to our stakeholders, especially the manufacturers and the traders, so that we lock our tariffs for a while. Otherwise their feasibility goes off track. And finally, minimize our exemptions at that. So I'll stop over here, and then we could move on during the forthcoming Q&A sessions. Thank you very much.
Thank you, Jawad. Now we have Nasir. I mean, he just was in Chief of Tariff, and now he's gone to Karachi as Collector of Appraisement this year because he's in the thick of things. So let's hear you.
Thank you, Dr. Mansoor. This presentation is basically based on a paper which I wrote for this conference on the encouragement of Dr. Nadeem, which I submitted to him. So I will not be repeating the things which my learned colleague has already said. I will rush through this and just concentrate on the points which need more elaboration. So starting from the tariffs. Tariffs can be used for multiple purposes. It can be used for economic growth, it can be used for competitiveness, for productivity, consumer welfare. So every country has to decide what are the prime objectives which she has to take into consideration while setting the tariffs. So when we see Pakistan's tariff, so three overriding objectives come to the mind. First is the protection second is the export promotion, and third is the revenue. So this is the line coverage. So on the face of it, things are not that bad as are generally told. At least 37% of the tariff lines of Pakistan tariff are covered under two slabs, which is 0% and the 3%, very low rates, but certainly there are something hidden into it in the form of regulatory duty or some other taxes. So we cannot say that in the true sense these are at the 0 rate or the 3%. But as far as protection thing is concerned, still 33% of tariff lines are at 20% rate, which is the highest rate with few exceptions for the auto sector and the alcohol beverages, etc. So Pakistan has followed a policy of protectionism from the very beginning, and nobody can deny this fact. In 1960s, the effective rate of protection of Pakistan for the manufacturing sector was about 271%. There has been reduction in the tariff rates between in the MFN rate from 2000 to 2018, almost 100%, from 25% to 12%, but still effective rate of protection is high. And this protection is a stated policy of the government. It is enshrined in different documents which, on which Pakistan Customs works. For example, CGA 2 of 2017 is a document which gives a list of over 1,000 items which are manufactured locally, and in case of import of those items, they will be not entitled for any concession or for any exemption which they can be otherwise entitled for if they are not being manufactured locally. So local manufacturing is a type of protection which we are giving to our industries. This is the rate thing, 271, highest than the other countries in 1960s. Then RD is also another tool which is used for protection. And kindly keep in mind that RD is not imposed by the FBR on its own. There are recommendations from different ministries like Ministry of Industries and Production, from different associations who are seeking protection. So the recommendations come, then they are deliberated upon, and the RD is imposed. The regime of RD has increased in the last 4 or 5 years extensively, and now almost I'm coming to this. So if you as far as protection is concerned, if we take just two sectors, one is the auto sector and the other is the textile sector, which have been highly protected traditionally. So if you bring a vehicle from outside, so the highest tariff incidence is almost 250% in the form of taxes. So it is the level of the protection which we are giving to the outside. In case of garments, it is almost 60%, and it includes all the import duty and taxes at the import stage. And even the old and used clothing, the duty and taxes incident is almost 26% at the import stage. These are the goods which are used by the poor of the poorest segment of the society. So they have even to bear 26% of the duty and taxes incidents at the import stage. In a way, we are providing protection to the garment manufacturers, to the textile. Then there are non-tariff barriers which are extensively used for providing the protection. And a case in point is SR 52, which the Ministry of Commerce issued somewhere last year. And you cannot bring under the law old and used vehicle from outside. There are only schemes for the expatriate Pakistanis who can import a vehicle under baggage, transfer of residence, or gift scheme. So that scheme, in a sense, was providing a type of certain competition to the local assemblers. So number of vehicles were imported under those schemes. Last year, 20,000 during July to August, July to August, there is a decrease of 83% in those. Against 20,000 vehicles, only 3,000 or 4,000 vehicles were imported during the last 6 months. So the competition which was there a little bit, that has also been is not there due to that SRO 52. So point is that the production is high. Production is high to the auto sector, production is high to the textile sector. Now the point is that competition brings in efficiency. But if there is competition, there is no competition or there is little competition, certainly consumer welfare is going to be compromised. What went wrong with protection? Every country has, given protection almost in the past. Even the developed countries have given protection. But what went wrong with us? My view is that we gave open-ended protection. There was no sunset date. We gave a shield against competition, and the local assemblers and the local manufacturers found a captive market in Pakistan. So they were least bothered to upgrade their technology to bring in quality. The second pillar of this tariff thing is concessions and exemptions. Concessions and exemptions can broadly be identified into 3 categories. One is through SROs and fifth schedule, which my learned colleague Jawad referred to. And second is Chapter 99, which we gave to the privileged people, to the diplomatic guys, then to special economic zones, etc. And the third relates to the export promotion schemes, which I will be concentrating a bit. There are 4 types of export promotion schemes. One is the manufacturing bond schemes. You bring in raw material duty free, consume it in your production, and then add value and then you export. So no duty will be charged from you at the import stage. Then there is export oriented unit scheme, which little bit more liberal even to the manufacturing bond schemes, where you even can import machinery, plants and equipment, etc. duty free. Then there is DTRE scheme, duty and tax remission for export purposes, where you can even purchase locally without paying any taxes. Then there is temporary importation scheme, where you bring in certain things, you consume it in the goods which are meant for subsequent export, and you pay no taxes at the import stage. So everything is, you see, very fine on the paper. 37% of tariff lines are covered under 2 slabs, 0 and 3%. There are liberal export promotion schemes. Then what's the problem? On the face of it, everything is, very flowery. So I come up with an equation which I call Cape-Cape relation. Here I compare that if there is 0 tariff, then you have done tariffification. You have given the rate 0 in your tariff, compared to given exemption through some SRO. There is difference between the operation, and there is difference between the cost of business which you will be incurring. For example, if you bring certain goods for subsequent export through value addition, what you will be doing, your import duty will be 0. CAP stands for cost at port. You will be paying certain cost, which may be formal, which may be informal, which may be combination of both formal and informal. Then there is cost, I call it K, cost additional to port expenses. This cost is when you are under certain scheme, certain SRO, which gives you exemption. This you will be getting some analysis card, you will be getting certain license, you will be consuming your time in visiting the offices, etc. You will be maintaining certain records for audit, so that cost is added. So the policy insight here is that there should be maximum effort, that we should introduce, we should do away with these exemption schemes, and we should tariff it. We should bring those exemptions to the tariff at 0%. Now, why these schemes are failing? I did a little bit analysis from the data, very low utilization rate, and then there are political economy issues as well. In 2017, only 5% of the importers utilized these schemes, but the exports were about 35%. FBR did some improvements, and that number increased last year to about 7% and 37% of the imports. So the point is that low utilization of those schemes is a point of concern. Why the exporters are not utilizing it? And the political economy issue is that the established exporters are utilizing it. The small exporters are not utilizing it. So the policy implication is that we should, rationalize these schemes or bring to the tariff at the 0 rate, and we should do away with the distinction of commercial importer, which Hamid was referring in the last presentation, and the manufacturers in case of import of input system. Then there is revenue imperative. Revenue imperative, there are multiple levies. This subject has been referred to earlier, and my colleague has talked on this. Expanding coverage of ACD and RD is there, and certainly there are implications of this expanding coverage for the industry. Revenue collection at the import stage is between 45 to 50%, out of which 15 to 18% is the chunk of the customs duties. The rest is withholding tax and sales tax and other taxes. So customs duties are not the sole culprit in a sense. So what happens is, when incidence of import duties is high, then there is incentive for undervaluation, there is incentive for smuggling, there is incentive for misdeclaration. A little bit math, because I have been told just there are time is short. Where do we stand? If we go by the average tariff rate, Pakistan is better than Bangladesh and India. If we go by various products rate, Pakistan is better in machinery, which is which is the foundation of the whole industrial process. Is better than Bangladesh and India. Then we compare the MFN rates start from 2000 and come to 2018. Pakistan has liberalized more, almost 100%. So things are not that bad on the papers. So a little bit math. These are certain things. There are two type of, I will be concentrating in just 2 minutes on that. Yeah. There are two things. One is the effective rate, which was referred to. You collect, you make certain imports and you collect certain duties. You just divide your imports with the customs duty and you get certain rate. Then there is weighted average rate, which is available in the WTO records, in the Moody's website. So theory says that ideally your effective rate and the tariff weighted average should be equal. If there are no misdeclarations, then there are no exemptions. So I did this exercise. This is open data available in Economic Survey of Pakistan, and what I saw is that there is huge difference between them. When the tax rate was high, unexplained hypothetical amount of CD which had been collected as per tariff weighted average was almost 138%, which has declined as the tariff rates were reduced. So this is the same exercise thing. Then we come to, I did another exercise for that paper. That was, I calculated collection efficiency factor. Simply you divide your effective rate by the tariff weighted average and you come up with a number. that number should be between 0 and 1. It would be 0 if you are doing nothing, if you are not importing, you are not collecting taxes. It should be 1 if ideally you are collecting and there is no waste declaration thing. Here we see there is a pattern which is, very important for the policy side. In 2002 to 2007, your collection efficiency factor is above 0.6 consistently. It is not consistent in other years. And then from 2013 to 2018, it is consistent above 0.6%. And this was the period when most of the reforms were introduced in customs department for simplification of the processes, for automated processes. So the takeaway is simply that strategic protections should be time bound with clear sunset date. Then import duties of all types should go, if not in a year, at least in the phased manner, or which include withholding tax extra on the input goods and machinery. And then you should give these concessions through tariff, not through the SROs. And then customs should continue with the reform process, and so the collection efficiency factor goes high and misdeclaration is reduced. Thank you very much.
Thank you, Jamil. So we entered the last segment, question and answer. Please keep your comments or questions short, and maybe if you can come up with your question starting up right away. And okay, and yeah, please go ahead.
Right. So thank you very much. I am engineer Saad Sikadar. By profession, I am an entrepreneur and a mechatronics engineer. I am working in the healthcare segment and in the renewable energy. So thank you very much for the panelists for the very enlightening talk. My question is, when we talk about the tax reforms, so what about the healthcare industry? You see, my question, any of the speakers can answer this question, but if Dr. Jamil can answer this, that when we talk about the healthcare industry, nothing is being manufactured in Pakistan when we talk about the medical equipments. All the medical equipments are being imported. And when we talk about the tax at the customs and the duties on the medical equipments, it has risen exponentially in the last 2 years. And the doctors over here, they are demanding the American equipments and the European equipments, and when we import those equipments, the taxes and the duties has raised so exponentially that one cannot afford to do that. Sir, so thank you very much, sir.
Thank you very much. I am Talat Anwar, Professor PIDE, School of Public Policy, and I must congratulate Teresa for her excellent presentation. Referring to her presentation, I would say that tax effort at 62% in Pakistan is not bad compared with 65% in peer countries, neighboring countries. It's not bad, and we all know that Pakistan is undergoing with an IMF program, and we have signed an IMF program which appears to be counterproductive with respect to its tax target. Tax revenue targets are very high, and we all know that IMF policy prescription. While we designed the IMF program, we know that devaluation was the main policy prescription which was necessary because of the overvaluation of the exchange rate, and devaluation has its contractionary effect, and it comes with a recession. We all know about it because of the low elasticity of exports. So we know that how, and despite the fact that we know that we will have a recession, and why we have set the ambitious target at 5.5 trillion, which is not achievable, and we are missing almost 700, 800 billion in this fiscal year. So that's my question. Thank you.
Someone said, sorry, wait a second.
At this point, I think tariffs and exchange rates are very closely related.
We normally discuss tax policy here.
Yeah, but I think once we are talking about high tariff rates, 12.5% compared to other countries. Perhaps our exchange rate is far away or much more far away than the equilibrium rate than in other countries. So we should take these two things together, and we cannot talk isolatedly just on tariff, because our exchange rate here is far away from the equilibrium rate as in other countries. And you can see that from 2001 to 2018, we have reduced the tariff rates, right, from 25% to 25%, as shown in the slide. Perhaps because our exchange rate is becoming closer to the equilibrium.
My question is, who makes trade policy? Ministry of Commerce or FDR? Who makes industrial policy? Ministry of Commerce, industry or FDR? This is my question.
You all know the answer.
May I say something? Please go ahead.
Excuse me, sir. Sir, being an economics student, we have seen a lot of study on poverty reduction, experimental study, and a lot of them are successful. Sir, my question is that can we do experimental study on tax policies on tax-based issues?
I have a small comment. Dr. Manzoor, I understood. I'll be quick. You mentioned the Turkish auto industry, and I would like to differ with you slightly about the Turkish auto industry. When they became part of the EU, they had an economic integration, but not a political integration. And so they used the advantage, the leverage, the proximity to the EU, and with a very high skill level, and also the major paradigm, which is a shift of manufacturing from developed to developing countries. They could do the same thing at a cheaper cost. That's one thing. They also produce more television, biggest producer of television sets in the EU, and they export them into the EU area. But sir, about auto sector. I was in the planning commission at one time, and the Suzuki people came and said, we would like to import the tariff from 35%. If something is made in Pakistan and is accepted by the tariff auto manufacturers, then there is a duty on it. Now every company had accepted this except Honda, and Honda prices went up. But Suzuki went a little further. What they did was they invested a $3 to $4 billion plant in Mohali near Delhi, auto sector parts, and they said, let's bring them into Pakistan at 0% tariff, and I objected. They said, no, we have a whole market patient. I said, you've been here 35 years, why did you do the same thing here? What they needed was basically a foundry, good foundries, and good foundries exist in Pakistan. So tariffs help sometimes in changing direction or going in certain direction. So, I mean, it's not all doom and gloom with tariffs.
I have written a long list of questions, but I'll restrict myself to just two. First is that I would suggest for PIDE to have another session of this, not on tariffs, but on the rules and regulations that are made by FBR, whether it is the IR side or by the customs, because they cost in some cases more than the tariffs. And for that reason, the World Customs Organization prepared a convention which is known as the revised Kyoto Convention. And based on that, the WTO has, developed a trade facilitation agreement that needs to be discussed and implemented in Pakistan properly. Not, FBR is these days trying to do that, but only a few of those points are being implemented and the rest are not being implemented. Secondly, there is one very sad story that I have to tell, that in Pakistan, if you recall the first speech of our Prime Minister when he was elected,
There is one particular point he raised was regarding the health of children and women, and that was the unfortunate incident, very high incidence of stunting in Pakistan children, 40%, and since then I have been part of some exercises to reduce this and to prevent stunting. But unfortunately, in FBR, these things get shut down. And this time they got shut down, I think, with the pretext of the IMF program, that no exemptions can be given, even for, reducing stunting of children, which is literally killing our children, but we don't have, say about 500 million rupees to save millions of children every year from stunting. So I don't know whether the tariff policy and these things can, raise such issues. But this is something I think that is, in our opinion, in my opinion at least, existential in nature. This threatens the very existence of Pakistan, but nobody seems to be bothered. And everybody talks about it, but nobody does anything about it. There is a ongoing program for many years of World Food Program, but even that is not properly supported. And so I think that at least this forum can raise this issue, that this kind of existential issues should be taken up and they should be supported. Whether it is IMF or World Bank or whosoever, nobody is going to stop you from, improving the health of your children.
ठीक है सर. ऑनलाइन लेकिन उनको ब्रीफ कीजिएगा, पूरे क्वेश्चन ब्रीफ उसका बता दें बात क्या है.
Iftikharullah Babar, former Secretary Senate of Pakistan. My question refers to the presentation of Jawad Agha, where he enlightened us about highly protected industries, two of them especially. One is automobile assembly and the other one is textiles. Textiles, I would understand, they also export a lot of stuff and we get a lot of foreign exchange, but the story is different from automobile manufacturers. So my question is very simple. Are these two cartels politically very strong, or there is some economic rationale to the high protection war behind which they are going? Thank you.
So it's a very small question. It says that if the empirics say that trade liberalization has a negative relationship with economic growth, so why are we following the same policy here?
Okay, we start whoever. Short करना है क्योंकि दो ही खत्म करना है, and I've also do.
The question was about whether these auto sector and textile sector, whether they are protected due to some political thing or there is some economic rationale. That was brief the question. I recall a study about Colombia. Colombia is a Latin American country, there were only 3 sunders as there are in Pakistan of auto sector. And then they opened up their auto regime. And the study finds that in a span of 3 years, when new entrants came to the country, and due to competition, there was benefit to the consumer of $3,000 per vehicle. So competition certainly brings in efficiency. So one aspect of this automobile policy has been that there are some new entrants which are coming to Pakistan. Almost 18 entrants have come to Pakistan, and perhaps 1 or 2 have also started the production. Maybe we are able to attack them due to this production thing, and when they come, competition reduces and things are better. But it is premature to to comment on that. And same this textile industry is protected almost everywhere. It is more protected in India, it is more protected in Bangladesh, and that's why perhaps one of the results which we are seeing today about okay, this has not upgraded in technology, etc. That's why that it was protected and it was not exposed to competition. So I think there are both factors are working. We cannot rule out the political economy consideration.
Jawad, please.
Thank you. I'll just try to quickly answer one or two issues which were raised. One was regarding the young gentleman asked a question on could they do an experimental study on tariff policy. By all means, and the FBR would assist in that definitely. I'm sure that the setup there would. And besides that, the Customs FBR had also set up an internship program. So every year they'll be taking on interns for that too. Another issue was raised as to who makes the trade policy. The import policy order and export policy order fall within the domain of the Ministry of Commerce, while the industrial policy is definitely within the jurisdiction of the Ministry of Industries. An online question came regarding trade liberalization. Would it have a negative impact on industrial growth? That probably, if you revert to the multiple times referred to 2001, 2002 policies which lasted till 2008, they were clearly trade liberalization was also there, and industrial growth was also at a peak in the recent past 2 decades. So that is not really an issue, and not I think any of the panelists really referred to it as a negative on that part of it. Thank you.
Yeah, I would like to explain a little bit the number of the tax for how it is computed, how to read it. It's complicated first sight. I mean, so what that means is that comparing with all of the countries in the world and taking into account macroeconomic conditions, development conditions, structural conditions, institutional conditions, the exercise has assigned a number to what the country is compared to what the country should be according to this pool of data comparison with other countries. So what 60% has to be interpreted in that way. Pakistan is 60% below what Pakistan should be. So there is a lot of room to improve the tax ratio. It is true that the numbers show that all the countries in the region here in South Asia also have the same problem, but doesn't minimize the problem. It makes the problem more common in the region. We believe Pakistan should go to a much higher level compared to other emerging markets. No, like an advanced country, but emerging markets, and increase the tax ratio, and that would be in the benefit of everybody. So this is what is behind this number.
Thank you very much. Just 2 or 3 things which